Welcome everyone to another episode of Candid with CredAble. I'm Nitin Sharma. I'm the Chief Product Officer and MD at CredAble. And today with me, I have Hrushikesh Mehta, who is the Chief Evangelist and the co-founder for Oaken. And during the discussion today, of course, we'll talk primarily about Oaken. We'll try to understand how Oaken came up into the picture and what all problems Oaken is trying to solve. But at the same time, we'll also learn about Rushi himself, his journey during building Oaken as a network, and what opportunities does he see uh, in the times to come. So, welcome, Rushi. Glad to have you on this session today.
Hey, Nitin.
All right, Rushi, so we'll get started first. First of all, would love to hear more about you. If you can just give a brief introduction about how did you get started, touching base a bit about your career, a bit on education, and also how did you get introduced with Oaken and what all you have been managing at Oaken?
So I'll give you the unadulterated version, and it is not planned as you would think it was. It was, in fact, quite random. Um, so, look, I've spent a majority of my career at actually what is now TransUnion Sibyl, but I was at Sibyl, previously in 2004-5 when it first launched. So I'm like deeply familiar with credit bureaus and data. I went back there in 2009 and then spent, almost 10 years. I used to run the direct to consumer business. Also like helped out with the products, but not on a full time basis, like whilst we were looking for a replacement. I then moved on. I used to follow Account Aggregator and DEPA even then. And this is now like 2017, 18. And my sense is we were, at that time, and maybe it was too early, but we were moving to the whole consent-based architecture, more data-driven, trying to do something fully digital. Um, and what I found is, like I loved the bureau, but the bureau did only one thing, which was basically sell data. So I actually went to work for a UK-based fintech that wanted to enter India called ClearScore. What Credit Karma is to the US. I know a lot of people are familiar with Credit Karma. So ClearScore is to the UK, but obviously the UK is only of a certain size, and they grew to saturate that market. So then they moved out into other countries like South Africa, Australia. They're now even in Canada, and then obviously India was one of them. However, in all honesty, COVID killed us in India, right? Because we were trying to go fully digital. So I did that for about 2 years. And when the shutdown came, the marketplace businesses were affected everywhere, but only in India was it like a complete shutdown, right? Everything went to zero for 3 to 4 months. So they couldn't sustain because they were funded out of profits, not VC money. So ClearScore is a profitable company even now. So it just became a hard decision, but it was one we had to take. And I don't hold anything against anyone. You just, one of those things. And in fact, in hindsight, now I'm thankful because when that happened, strangely, right? Like when that happened, actually a friend of mine very randomly just, Sharad and Sid used to do these, or still do these open houses, about the new things coming. And a friend of mine from Delhi, actually, a school friend, just sent me this. He's like, yeah, Rushi, I think you like this. You keep talking about digital and they're talking about infrastructure that would make this easier. And I basically watched the recording of the open house on YouTube, and I realized I'd met Sid Shetty before. He had come and presented to the Sibyl board in 2017, and I was on the products committee or whatever. So, obviously we were present. Um, I went to the iSPIRT website and reached out to Sharad basically and said, look, I'm not doing anything at the moment. I know all this about the ecosystem. I didn't get a response at first, but then I started making suggestions regardless on the next email. And because there were subsequent open houses, like another two or three of them on Oaken. And then I got a response, and that's like typical of iSPIRT, right? It's not only a think tank, but if you offer suggestions, then you're welcome. But if you just say, I'm willing to help, you probably get no response. And so I volunteered for about 4 to 5 months, just doing thought experiments. Honestly, I felt I was being like vetted because it is national infra. I came from MNCs, that sort of thing. So finally, as luck would have it, in December of 2020, there was this guy called Ankit Singh, who now is an entrepreneur in the US, made a life choice to move there. And he was running the initiative at the time. And he's like, "What's your timeline?" And I was like, "Look, I have no timeline because I have nothing else planned, and I'm happy to do this." So he was like, "Yeah, will you help come build the UPI for credit? You spend a couple of years, maybe go on to do whatever you want to do after that." Framed like that, it was almost very hard to say no. So I signed up, and I think I'm about 2 years in now. And we'll talk more about that journey shortly. But I've always been bent towards, even Civil was national infra at that time. This is impact at a micro level. Even back then, the bureau's ethos was, can I make decisions faster? Can I get credit to people who can't? So it's sort of aligned to that. And so I ended up doing this now. I mean, it's 2 years and some. Probably do it for another year. If it institutionalizes, maybe longer. But yeah, I mean, I won't speculate about what will happen in the future, but that's where we are today.
That was great start, Rushi. So since you mentioned at the UPI for credit, and I want to understand when you heard it for the first time back in 2017, 18, I think the time period that you're talking about, uh, what did you think at that point in time? What is the problem that existed? Why do we need a UPI for credit for the first instance? What are the traditional problems that we have seen with the conventional credit products that exist in the market?
See, like more than like a lot of this digital infra has been around for, actually a while now. So let me take you like actually, it took me about 6 months to fully wrap my head around all the infra and how you could use it, right? And that was when I was doing it, I almost completely focused, like 3, 4 months, getting under the hood of UPI, getting under the hood of what is Oaken trying to do, what is account aggregator, because otherwise they were amorphous concepts. Like all of these are very real now. Um, and like, look, the challenge was, I can tell you from my anecdotal experience of the experiences working with lenders at in the bureau, or even as ClearScore and trying to digitize their flows, right? What you found, one is there was a sort of institutional resistance to the smaller ticket loans, right? And the reason for this is it's learned experience, right? For 30, 40 years, you've been doing the same thing, and the conventional wisdom was larger ticket sizes make sense. Um, for MSMEs, I need collateral. Large corporations are okay. We'll take a decision by committee. Personal loans. I think Bajaj changed the paradigm in 2006, 7 when when the bureaus came about and they went down that path. But there's all, and then everyone followed in personal loans. So where you landed up about 4, 5 years back, or probably still are, is where corporations get loans, retail salaried people get loans, and we all know that, right? You get phone calls almost regularly offering you credit when you don't need it. But MSMEs are the flip. They have to make the 20 phone calls for even someone to entertain them, right? Uh, Now the other problem was because they're small ticket and because they're distributed, like I've always, like, I mean, whether it was at Civil, whether ClearScore, the only way you service millions of people is if it's automated, and the only way you can automate it is if you're doing it digitally, right? There's no other way, to be honest. And I don't mean to say it's a silver bullet, but if there is another way, someone show me how else you can reach millions of people at small ticket sizes. You can't have the suited and booted banker or relationship manager going to an MSME. It's just not going to work, right? So we felt this, obviously at the bureau, we'd focus more on the underwriting and were not so worried about the downstream. But as long as people did loans, and you saw the explosion in retail salaried loans from 2016 to about right pre-pandemic. But the commercial side, the commercial bureau side of it, which is representative of MSMEs, was still lagging. The other thing we've learned at ClearScore was the reluctance of players to want to go digital. Like, believe it, I mean, now it's hard to believe given what has happened post pandemic. But you would say, no, I'll digitize the whole process for you. They're like, no, send it to a call center agent and they will close the sale. And we were like, but you lose. It's not quick. It's longer. Incentives are for the agents to sell higher price products. Sometimes they don't understand the need as opposed to the consumer just serving themselves, right? And some were willing to do it. Usually, it was the more agile, smaller NBFCs who were trying to win market share and didn't have this massive distribution that larger banks with billions in capital are able to build. but it was still in pockets. And what's strange is even after we closed ClearScore down, 6 months later, we started getting calls. Yeah, you were saying you will digitize everything. Now will you do it? And I'm like, now we're done, right? So, so I think that need was there. And then obviously once I got into this whole, helping build the Oaken rails, what you realized was similar, right? Like even when we were talking to lenders, the negotiation on what the API spec should be, it made it a little easier as an infra platform to have it because I was like, look, you want low costs, you want low cost leads, then you abide by the standardized APIs because customization comes at a cost and the costs increase. Then again, people don't take the loans because they become too expensive and whatnot, right? And look, I don't mean this, but what happens with larger institutions is every department adds value, right? So what ends up happening is more and more requirements get layered on. What we did was we studied what was required and then whittled it down to the bare bones of what is required to be compliant, as opposed to, just all these things which you didn't need. And that's why it can be done at a substantially lower cost. So my learning from this was, two, standardization, obviously, and this is, actually it's quite simple. It's just that we're applying concepts of different, which exist to now lending, is that standardization will lower costs and distribute digitally because then you have wider reach than if you try to distribute physical, because if you try to do it physically it's going to be more expensive and you're going to have narrower reach unless you invest billions of dollars. So I think that's basically the answer. And I think, look, 10 years back, even if you had all these grand ideas, nobody would have been able to do it. And I think that's the difference in our country. If you zoom out a little, the advent of Aadhaar, yes, it started for one reason, ended up being used for that reason plus many others. But Aadhaar, UPI, account aggregator for data transfer. Basically, what account aggregator has done is digitized every potential document that is going to exist in the future, right? Because documents are data. We tend to think of documents again path dependent because we've always submitted a bank statement or whatever, but it's basically what you're giving someone data about you to take a decision, right? And I think account aggregator digitizes that, and then we, as Oaken, will come in um, as the last step, where you standardize it, build highways for everyone to use, to be able to distribute products digitally, because all the other pieces are now in place, whether it's data, whether it's low or no cost payments, and digital identity. Now, yes, we haven't solved for institutional identity and institutional the ability to sign, and how do you make that non-reputable. But there's already a solution for that we've thought up. It's only once this scales for sole props and individuals, we'll take up the next step.
Correct. So if I try to summarize that, I think what I've understood is using digitization to actually get efficiency so that you can fund small ticket loans. And second is having that distribution capability, which maybe a lot of banks and NBFCs may not have today. These are the
Right.
two major reasons I think that are coming up from the advent of Oaken. But how do you actually do it? So this is what I think the problem that you saw and then what you are trying to solve. But how do you actually do it? If you can talk about that, also take this as an opportunity to talk a bit about how Oaken works for the audience.
Okay. So the way we've decided to do it, look, and this is not my experience, this is my learned experience from previous volunteers, is like when you develop something new, right? You have a mental model of how it's supposed to work. But what ends up happening is that the market can't conceive like suddenly that, okay, now this is how I'm supposed to use it. Um, so what we did with UPI was Beam was built to show what is possible to do. And then, the rest is history. Now you have PhonePe, Bharat Pay, Paytm, Google Pay, and all the whole host of other apps. Obviously, the larger ones have most of the market share. So the first thing we did was we say we'll build a reference app to prove what is possible. Um, and we did that with the government e-marketplace. It's called Gem Sahai. It was not even initially intended to be the original reference implementation, but other infra pieces were taking longer, like account aggregator. So we said we'll start with government e-marketplace, who very graciously agreed to try to pilot this with us. And it started, right? We started. The first loan was given in May 2021. Ugro was the first lender. It was just one lender, and POs coming through, and obviously you have tech issues with any launch, like anything and anywhere else, and there's troubleshooting and stress and all this good stuff. And then finally, the first loan went out of 360 rupees. That was the only loan we gave in May. And then, the next month was a couple of lakhs, and then, now it's hovering around a crore or give or take, because it was still at a pilot level. So that was the first step. It didn't include account aggregator. We just got some platform data from GEM, like a seller rating based on how the seller was performing. And that used with credit bureau data was enough to create an offer. And, we had a collections mechanism other than eNACH, which is the virtual account in the borrower's name, to be able to collect. So that was the first implementation. Now I'm going to say something which I just got data like 15 minutes back in terms of the program expansion, right? So, we've got 4 days of data. We just got GEM deployed the ability for all the 90% of the balance POs, right, for sole proprietors. And we are seeing about 5 to 6 times the number of POs that we're getting in the fund block and 10 times in value of what we're getting currently. So that was the hypothesis earlier. So, now we're going to integrate account aggregator into it and eNACH. And I think then we'll have a fully baked version of a GEM Sahay app for sole proprietors and probably see the volume scale. And hopefully by the end of January, we'll see that go up. Now, that was the first reference implementation. The second one is GST Sahay, which is invoice financing. And that was actually the showcase implementation because that was the budget announcement by Finance Minister 2.5 years ago now. This is the original design to do invoice financing with GST data. So that is actually in process. We have three, four lenders actively integrating. SIDBI has already given a few loans. They've built the app and are managing it, so they've already given a few loans. So we are very hopeful, pushing everyone by the end of January, to get some NBFCs and banks on there, so that we finally have a proper marketplace there before we then try to scale that further. But look, now you have these two implementations in place. Everyone starts thinking, okay, now I understand how to use this. Now the next step is how can we do this for whichever use case you can conceive of, right? So, see, my general sense, whilst I've been doing this, and look, I've spent a fair amount of time now in Bangalore talking to startups, and everyone's like, yeah, find me someone in a lender. I can't get this use case funded. And you go talk to the lenders, and they're like, yeah, give us new use cases. And somehow I'm like, man, the need is latent over there, but somehow they're not making the connection. So that's what we so to speak, where, for example, someone was saying, particularly large, I won't take platform names without having their permission, particularly large B2B marketplace, probably has 60, 70 million users a month. Saying that, yeah, I can't find someone to do a GST invoice financing product. And I'm almost holding my face, but I'm there are lenders out there who are waiting to do products like this, right? So I think there's this latent need. Then there's, another product where there's a village dairy entrepreneur who, they not to get too deep into the use case, but basically they collect milk from dairy farmers and provide it to processing houses. And these guys need credit to give the dairy farmers to buy more cows so that they can expand the businesses, which is credit is not available today. So he's like, help me build a use case. And okay, now this one is a harder one because this is stuff lender. So, but we will go and start talking to lenders and try to create these new use cases as well. Now, while that's easily said, what also happens is, look, as all profit-driven companies will do, they make prioritization decisions on which ones to do first. Now, the beauty of the Oaken rails is that the delta for each use case is not very large. Once the lender has integrated once, the delta for every integration potentially is not very large, right? So now they can do multiple use cases where, whether it's this, whether it's a food delivery app and trying to do delivery boy financing or restaurant financing, or like ride hailing apps, and you even want to have a Uber driver, Ola guy fill his gas tank, with credit within 3-4 minutes. Hopefully that should all be possible in the future. We're seeing use cases even for microcredit, right? Like where for cottage areas, people want microcredit, they're far-flung locations, and it might be semi-assisted in the beginning, where that these people called adhikaris or banking correspondents are in the villages who teach them once, and then after that they're on their own, right? And that's how UPI sort of spread. Um, as well over time. So the idea is to create an explosion of use cases. So our like the way I see my job is, I basically tell startups that you tell me, don't worry about what the lender will or won't do. You say what your use case should be, and then we'll go find an agile lender to try to participate in that, right? And the last thing that we've started to do, a lot of the lenders are saying, yeah, give us some cover, in terms of like all these are new use cases, and very simply, and this is an institutional imperative, right? If I go into a new use case, mature products have NPAs of anywhere from 1 to 5%, depending on what it is, and suddenly I go do a new use case and I have an 8% NPA, it'll hurt my career. Uh, Everyone will just pull back from this thing. Yeah, chalta nahi hai. So the experimentation won't be there. And there's one thing in saying that, okay, you go to CEOs and say, create space for experimentation. But it doesn't always happen, right? So the CEO might say, okay, but it doesn't trickle down and there's, no space for these guys to experiment. So what we did is we are talking to CGT MSE, which is the Credit Guarantee Micro and Small Enterprises team, to create a credit guarantee which is time bound, so that lenders who are participating in new use cases get 1 year of cover where you have time to experiment. And these are all short-term loans, right? 3 months, 6 months. So like within 6 to 9 months, people will by and large have discovered a policy, and even if you start conservatively or whatever, and then the credit guarantee can be withdrawn for that use case, and you go on to the next one, right? So that's what we'll do. We'll provide some cover. So see, when you're building this, you can't think of it only from a technology perspective, right? It's not limited to that. So yeah, theek hai, API bana diya, standard APIs for everyone. Now go do your thing. It doesn't work. You have to be the catalyst where you push through the first two implementations, maybe create the next 10, 15 till everyone starts believing, oh, it is possible to create new use cases, and then they start doing it themselves, right? And then, from an ecosystem perspective, the final piece also is providing some air cover, where there's some cushioning if things go wrong. And look, there are other things that we've tried to help with doing, even from a policy standpoint, is the other operational costs, right? Like, for example, I think e-sign was $25. It's become, we had recommended a reduction to make it more widely usable for these small ticket loans. The other one was even bureau costs, right? Like you can't pay bureau costs for these small ticket loans if you're giving them, one off for 3 months or whatever. So the bureaus have been quite helpful. I hope, at least they say they have, in reducing this cost for the experimentation. So, like you have to do all angles of this to bring down the cost to make it real. It's not enough to only do it from a technology standpoint. So, in a way, it's incredibly fun because you have no boundaries or no limitations, right? You are as enabled as you want to be. Tomorrow, maybe a few years from now, if you go back to like the market and have to do something within rules again, I think it's going to be very difficult because here you could see how the world should be and work towards it. When you're operating in an environment, you just have to work within the boundaries of what this are, right? So I think that's like the major difference in the two forms of operation. I don't know. I hope I've answered your question.
No, no, I think answered very well. And in fact, you touched upon several different aspects also. I want to come back to two of them. The first one is you talked about the cover part for the lenders. I think this is the key ingredient when you're trying to introduce a system like Oaken or embedded credit, wherein while digitizing is important for the lenders, but at the same time, at the end of the day, they also think that would I be able to recover my money from the borrower or no? One, of course, is how do
Right.
you do it if they are distributed across several states in India? The second aspect is What if something goes wrong? Can you just elaborate a bit more on the CGT MSC part that you spoken on? So if I'm a lender, what is the kind of assurance I can get? What is the thought process around that?
Okay, so the way we're thinking about doing it, it's not nailed down, right? So I won't talk numbers or whatever, but
Sure.
look, there'll obviously be a use case, right? So we'll start with, maybe the GST Sahay use case. And you'll say, Acha, you're going to give a loan. So for loans given on, via GST Sahay, SIDBI's GST Sahay, for every loan that you want cover on, you'll have to pay some percentage and it'll be annualized because currently it's a annual fee. But, because for longer term working capital requirements. So I was like, no, that won't work loan or 2 month loan or 6 month loan. So they very graciously agreed to annualize that. And then it's fairly straightforward, right? You submit the details to the trust. You pay the fee, you get the cover, and if you need to invoke it, you invoke it. I think it'll be up to 75%. And that is what it is today. In any case, and then obviously, if you recover, you pay back the proportional, cover that you got. The other thing that we're working with is trying to do that API driven, right? Because now this is at small loan level. There is cognizance of it's quite hard to make the claim. So if you're going to do hundreds or thousands of loans, then you shouldn't need to go jump through hoops to do each one. So can we do it API driven because it's all straight through, right? uh, Including make payments and all that stuff, right? So that might be longer term, but I guess to just test the credit guarantee scheme, we'll do that maybe the way it is being done today, but then put that API mechanism in place. See, because the reason which I like brought up was, see, today it's one use case. What happens when there's 100, and how do we decide which use case to include and not? So we've also, to begin with, uh, created some a ceiling. So you can't, the credit guarantee won't be available for more than, I can't remember now, 3 or 5 lakhs or something like that. Or 5 lakhs, I think it is. And for not new to credit, it'll be 2.5 lakhs, right? Because anyway, the lender will, shouldn't be like willy nilly giving loans to new to credit people till they have some track. And the other thing is we'll also put in some score cutoffs. So I've worked with the bureaus and got odds charts, and we'll try to limit the score cutoffs to like something which will be in the range of 5-6% probability of default, so that you can't be 10% and all. Like you can't have the trust being paying amounts for things are going to go wrong. So we'll do it at the margin where it's not necessarily going to go bad, but at least maybe some people who are on the margin will get loans but will get cover, right? So that's how we're thinking about it. I mean, okay, this is I think it'll be good enough, and this is like anything else. We'll put out a pilot. It's not set in stone. We'll see what comes back, and then it can be, obviously tweaked after that as well.
Got it. And second part, all the ecosystems that you mentioned, that you started with Gem Sahay and then soon launching on GST Sahay. What is the kind of timeline that you're looking at in terms of onboarding more and more ecosystems? So, like you mentioned, some food delivery app they want to enroll. What is the roadmap like for that?
So look, we are building like a gateway, right? A light gateway. Now I won't get into the very technical details of at what stage we stop and that sort of thing, but um, so the question is, do you wait for that, or do you like then pull in more market players to do bilateral integrations? My only fear with doing that is, look, these are all new use cases, man. Like if I pull in a village dairy entrepreneur kind of use case, I like really want to do it, but I'm also cognizant of that GEMSA hasn't scaled, GSTSA hasn't scaled yet. Lenders have already made investments. Do you ask them to invest in a bilateral integration, or do you ask them to wait for a gateway? Now, it's a tough choice because we are impatient. We're all private sector guys trying to build a public good. So, I mean, the thought is, yeah, just do another use case as well. But See, what happens is if, like, say I pull you in and you do five use cases and maybe only one scales, then you'll say, "Yeah, itna investment kiya, lekin what did I get out of it, right?" Because, but see, that is also one of the conundrums here, right? You don't want to exclude smaller use cases because they're new, right? But they might become large. The point is you have to try, right? Now, some are agile enough to do it quickly, but if they're making massive institutional changes just to get on GEM and GST side, now to go back and say, "Acha, ye abhi do aur bhi leke aa rahe, wo bhi karo." Um, so yeah, maybe we'll do that. Like we're working with a couple of players to think about doing that. But it's just, and one of the last things I didn't also mention is real time reporting of data. The so we are working. So for the real, because these invoices are financed in less than 10 minutes, or, the POs as well. At least for invoice, see, for GEM purchase orders, you can't go to another platform and finance your purchase orders, right? It's only going to happen in one place. But nothing stops anyone else from building a GST type app, a GST invoice financing app. So we've built SIDBI's built an invoice dedupe registry where there's real-time reporting of the invoice number into that. So the lenders will have that to make sure that they're not multiple financing that same invoice. We still don't have real-time reporting from the bureaus. That said, I've worked with the bureaus and they are working on pushing that. But the challenge is we don't have that now. Now, if we go and enable five more use cases and don't have real-time reporting, uh, are we going to create a tool that will create leverage in the system unintentionally? So that is, I'd be very candid about, the push and pulls of it. Like, obviously, we want to do this quickly. You want to scale credit. But if that last piece, which is the stopgap piece, which is like how do I have a backstop on too much leverage or multiple financing? Because otherwise, technically, in 3 weeks, someone could take multiple loans before you even know that they don't have the capacity, right?
Right.
So, look, it's not saying that if we come up with a new use case in 3 months, it'll like blow up to some massive extent. But we don't know which one is going to come first. So, we're already working on building that milk receipt financing use case and another invoice financing use case app. But I mean, that will still take 3 to 4 months before, even if we start, say, in January, it'll be 4 or 5 months before anything happens, right? So, maybe that's what will happen. I'm purposefully being non-committal because we don't have a clear decision on which path to go, and or the other path is, do we scale GEM and GST first, and then GST SI first, and then wait for the gateway so that there's less integration hassles for everyone. So very convoluted answer, but like like three basic points. Do I ask people to invest? Wait for the gate, in bilateral, wait for the gateway, and are we good without real-time reporting to go ahead and do this anyway?
Fair enough, Rushi. So, see, more and more, what we understand about Oaken now is it is very contextual lending is what we're trying to build, wherein
Right.
we are onboarding more and more ecosystems on board. Is there a vision to bring in non-ecosystem MSMEs as well? So, let's say I'm MSME in a tier two, three kind of a system, and I today am not even GST registered. Hence, I may not have a GST filing history also. I think to in context to GST Sahaya, I'm talking about. Is there a vision for that kind of audience as
Yes,
well?
yes.
Or
So see, the what happens is sometimes we repeat what we are saying so much that everyone starts thinking that's the only thing that's going to happen. And this is not the first time I got this question, right? Like, look, GEM and GST are just like reference implementations. They're not the end. They're only the beginning. Now, can those MSMEs who don't file GST be included? Absolutely. That is the entire point. Like GST is not a universe, right? There's nothing. So when I say micro and I say villagers are going to get micro loans as well, they definitely don't file GST. So what you're looking for is, okay, if there's some other platform data, right? So like say in the village dairy entrepreneur case, maybe the milk processing unit has which farmer has sold how much milk. So that gives you some transaction data. In the case of a kirana store, who's just, I don't know, like a sweet shop or, like a little mom and pop store in some village who takes UPI payments, that might be enough transaction data to give them a loan. And they're still, you're just giving it to an individual versus, to what we classify as an entity. So absolutely. So which is again, I will reiterate, these use cases are not limited to the ones we keep talking about because those are just the ones we are building now. Any use case you can conceive of, we are happy to enable.
Correct. I think, and I keep repeating this because I think we have been working and discussing with you and the Oaken team that when can a platform like Upscale that Credible has built for the MSMEs, when can they come on board to leverage the existing integrations that Oaken has
Yeah, yeah,
done
yeah.
with
So
the lenders? So,
see, that is what you're describing as an LSP, right?
correct.
That's the distribution side of it. I think in another 4 or 5 months, like, see, what we were doing was trying to build the supply side where you train the muscles of at least 10, 12 lenders to go down this path. So this standardized API driven route. I think we're there now. Now it's just a question of starting. So honestly, like, uh, th- I mean, we can have this conversation offline, but depending on the number of customers and all, if you want to start now, we can. Um, you don't have to do it through the gateway. It's supposed to be open API. So the gateway is just one way to do it. Uh, we can just create the use case, take it to 10 lenders and get on with it. You want to do a GST invoice financing use case on that? Why not? Right? Like, see, the idea is nobody's monopoly, right? Quoting Dhirubhai Ambani, it's all supposed to be open. So, like, if you want to do it, there's nothing stopping you, and we'll help you if that's what needs to be done.
Sure. Got it. Since you touched upon the supply side, that you're more focused on strengthening the supply side first with respect to the lenders, and see this model of contextual lending or embedded finance, embedded credit has been there now since last 2 3 years that we have learned about it. Uh, what we repeatedly see is a lot of lenders today, since they own a customer, right? And so the first time a customer comes to them, they actually store all of their details, and every other time the customer would reach out to that particular lender for their future lending related needs. But with the introduction of systems like embedded credit, embedded finance, and even Oaken, right? Uh, what is your experience with the lenders? Do they see this as a threat that they lose control over the customers in the long run? And there is no exclusivity of the customers. Once a customer is on the Open network or a platform like Upscale, they eventually can be distributed to a large set of lenders automatically. So, what is your feedback, or what is your sense from the feedback that you heard from lenders?
Okay, look, so it's like a two-stage type thing, right? So NBFCs have often come and said, man, y'all are now standardizing what large banks couldn't do. Now we are under threat because they have a better cost of capital than us. So how will we compete? Number one. On the other side, banks will come and say, man, we have distribution. Now you've done this all digitally. Now NBFCs will be able to lend everywhere. And then how will we compete? So what I am generally like confused about, and then I realized like the appropriate response to this was, look, one is you're fighting over an existing slice of some pie, right? When there's a whole nother pie there lying for people to divvy up. So I would stop scrapping over what is existing and start going down that new path, the unexplored, less competitive currently, but probably harder to tap today, right? The second piece is, look, we've leveled the playing field to some extent. That this will do that, and that is true. And I think the guys who will win in the future will be the guys who build the muscle to be able to ingest various forms of data, to make
True.
sense of that data, and then to be able to rapidly iterate and create models, credit
Yeah.
models from that data. They are the ones who are going to win because, look, my experience running a marketplace, it is not the most cost-effective loan that often wins. It is the one which is the most convenient to get. Now, I'll give you one anecdotal evidence from the GEM Sahay use case, right? So NBFC is already on board. One large bank comes on board, and they were like, "Yeah, yeah, we'll test and we'll take the customer on the phone and this, that." And something broke with the API, so it wasn't working. And they said, "Acha, we'll fix and come back." And in that 3-4 minute conversation, the customer, there was an existing large bank customer, said, "Nahi, nahi, it's okay. While we were talking, I already took the loan from the NBFC. It's already in my account. Chalo, see, it's okay. I don't need it anymore." And that was educative to me. And I'll make a very controversial statement. People who don't go down this digital path, and it need not be Oaken, it could be any digital path, right?
Yeah.
Will be dinosaurs in 7 to 8 years because they will not be able to compete. You come out with the lowest offer, but even for like at 1 and 1.5% more for a 3 month loan, if you're getting it in within 10 minutes in your account versus 2 weeks of jhanjat, like who is going to be able to compete with that? And see, once the guys see NBFCs, you and I both know NBFCs tend to be more agile in giving the first loans. When the bank starts seeing track, they will start giving offering loans, and you typically lose the customer to um, the bank. Now,
Yeah.
over time, look, your processing costs are going to be lower. I've already seen that drop on the platform with 7, 8 lenders. Like processing costs have been eradicated because suddenly you realize, before processing costs were taken to cover a manual cost. Now you don't have that. You have a sunk cost of tech, right? Which you can build in a depreciated value in your interest rate only, and that's much less than whatever that whatever fee you took to cover the manual cost. So we've already started seeing that happening. So and in fact, again, I won't take names, but one NBFC is giving loans at a lower rate than banks. I mean, like go figure, right? And the strange thing is, everyone is able to give loans because everyone underwrites differently. You're not sometimes competing for the same guy. So, in fact, I'm envious. Like most of the guys who embrace this, and I know the numbers are small right now, but who embrace this and are ready for when the explosion comes, they are going to be a few years ahead of others who start later, because this is a different way of doing things, and especially for larger players to make that adjustment just takes longer. That's all. So, like just in a nutshell, rather than be fearful of competition, I would think there's a whole green space left to occupy. I would like focus my efforts on that than trying to compete over the same existing folks.
Sure. Switching a bit, I think, to the account aggregator that you talked about. So on the account aggregator side, what I understand today is primarily banking data and GST data that you can fetch from the account aggregator framework. How are you utilizing this in Oaken today?
Okay, so let me just give you some more nuggets of information. So yes, there's banking. GST has been approved and is in the process of implementation. Hopefully, should get implemented before this financial year is out. SEBI depository data has also been approved. It's public news, so no harm in saying that. And then maybe I think pension fund insurance data will also eventually make its way onto this. And then any form of data you can think of, eventually, I think we'll get on there. Now, the way we are using it, we've not used it at scale on the marketplaces yet. Obviously, lenders are using it already in their indigenous flows. But SIDBI has tested it for the loans that we are giving, and obviously, as anything issues pop up, and we are fixing those. After all, it is national infra, so you're going to find some chinks when you're getting, like, I don't know, 200-300 commercial banks to start contributing. Uh, but it is embedded in the flow. The other thing that we are just waiting on, which is going to be completed shortly, is a multi-consent that the account aggregators have to do. Because, see, currently it's a single consent for a single indigenous flow of a bank. But if there are like 10 lenders participating on a marketplace, you don't want to have to give 10 consents.
Correct.
So they're just building that flow. And once that's ready, we'll deploy it. So so this you consent once and your data will go to 10 lenders in a go. And so that is, I mean, it's a very simple implementation. It's a simple redirection to the account aggregator that the user chooses, consent, redirected back into the app. Obviously, it'll feel like the flow is on the same app, but you don't need to bore everyone with the details. But it's simple redirection, redirect back, and you're good to go.
Got it. And then coming to the KYC part, I think today we fetch the OKYC, right, onto the platform.
Right,
Then,
right.
and from RBI compliance perspective, how does that work out?
Okay, so look, you know, every lender has to take their own call. I'll just start with a disclaimer with that. But look, here's the view, right? For individuals, if it's like an unsecured loan just based on data, which a lot of these loans are. If you actually think about it, okay, in GemSci, in the fund block version, it is for a particular purchase order, but um, it's not really like end use control, right? You're just giving, acha, this guy has operated well, so I'll give him a loan, and then hopefully he'll deliver and I'll get paid back. It'll be similar when we expand the program and introduce ENACH. For invoice financing, it's the same thing. Now, for individuals, it's simple. Up to 60K, you're all good, within 1 year and all this. For sole proprietors, it's three-pronged. You need entity, individual, and proof of activity. Proof of activity is optional, and the way it's worded is difficult because it's on the onus for the lender to prove that the document is not available, which the more conservative lenders will just interpret like I have to have it. And for unfortunately, none of those documents are available digitally except GST, which is a download upload, not straight from the source. However, there are two, three things that have happened. OKYC is always there. When GST comes via account aggregator, it'll come digitally signed straight from the source. So it becomes that entity KYC proof, right? And the third is getting Udyam. So Udyam is like they approved it putting on the DigiLocker. I don't know if it's happened yet, but once Udyam's on DigiLocker, then you have your third because it does serve as a proof of activity. And hopefully, I don't know, we probably have to engage with the RBI to say they can make it specific that it's okay as a document. Otherwise, everyone stays very clearly within the guidelines. So that's solving for sole proprietors. The next step is solving for entities. Now, look, since sole proprietors are like larger by volume, maybe smaller by value, because we couldn't enable a distribution to them yet, we'll focus on fixing that first. The second piece is then we'll get into how to fix this entity KYC issue. There are multiple things, without like getting too much into the nitty gritties, but there are two issues with that. One is, okay, how do I do entity KYC without documents, right? And second is, how do I know who is the signing authority and how do I know what limits they can sign to, right? And it's particularly complicated for partnerships. It's particularly complicated for private limited companies, which is why you need board resolutions and all this.
Yeah.
So honestly, we've already thought of a way to get around this, but and within existing regulations, right? So again, it's a tech solution, but given we are a very lean team, we'll pick that up in the next go. So because look, larger ticket loans, everyone will send the RM to get it done, right? So we're not going to constrain that in any way. But sole props, once we solve for, we'll pick that one up as well. A completely digital way to sign agreements for entities who are not sole proprietors, hopefully in the same 10-15 minute cycle to get it done. And look, like I don't know if you've been following, but there are some movements, in terms of signatures being okay for property transactions and that sort of thing now. So I mean, like if I had to be like, how we always have these ambitious end goals, I think say a buyer of a property in Delhi should be able to buy it from someone sitting in Mumbai and be able to do it in 15 minutes without ever meeting the other party, right? I mean, that's what we should aspire to. And when I say it's a buyer, it could be an entity or an individual. So if we can build, and this might take 5-7 years to do to get to that level, but if you can do it, I think it'll be game changing. But I mean, that's a secondary issue. We'll fix sole proprietors first.
Since you mentioned lean team, I would ask you what is the team size behind Oaken?
I mean, it's frankly full time is me, and they're like about a team of 6-7 part time volunteers, iSPIRT volunteers. I'm also an iSPIRT volunteer full time, but yeah, so it's a kind of a heavy burden sometimes.
No, absolutely. I think it's a lot of work that you guys have built so far. And during the discussion, I learned I think there is so many things yet to do. I think to reach the overall vision that you guys are after. Uh, on a similar note, I want to understand there are several efforts that are being done by so many fintechs, right? So be it embedded credit, contextual lending, or on the other side, building an infrastructure for the lenders. How are these companies coming together and contributing with the Oaken framework to so that there is a government and private collaboration in terms of pushing for the vision that everybody is after. So, for example, see, Credible today has an open connector on the lender side, but are you seeing several other use cases also where there is participation between public and private now?
No, man. So look, it's too early, right? So what's happening is, look, there are other technology service providers who do the same service on the lender side. I think that will also develop on the LSP side, the loan service
Yeah.
provider side, because not everyone will want to build their own solutions. Um, and then there's other work for the lenders, like the data coming through, making suggesting what the credit policy should be. Obviously, the lender, given the regulations, has to take the final call on what that should be. But that stuff will also be required, because often, in my experience with these new use cases, sometimes people don't know where to start. So what we do is we provide a starting point, and all based on odds charts from the bureaus and all. It's not like kuch bhi de diya or whatever. But eventually those will need to be tweaked. And my experience has been, initially we get a lot of questions from the lenders about the model and what should I do, what should I do. And once a few loans go through and they figure out how it's working, then it goes silent, and that's when I know that they figured it out. So the silence is a good thing, right? If they're not asking questions, now they're comfortable and they're moving on with life. And that's how I think it'll happen. But I think it's okay when you're doing it for one or two use cases. If you have 100 cases, then doing it manually is not an option in my view. They won't, I mean, you'll make mistakes. So, that's where I think the whole machine learning, AI will actually come in. When you're getting streaming data, your models are changing within constraints that you have like specified, but parameters and thresholds will change as the data changes. I think that will be like the true definition of AI in the next 5, 6 years, where you have streaming data and models are changing on the fly, not with 3 months and 2 weeks and 6 month, review cycles. Those review cycles will be as the next loan default happens, right? So, I think that happens in other use cases. Like, so, as part of iSPIRT, we've been fortunate to meet a lot of like people from very diverse backgrounds. And I think, like learning of how Google does that predictive typing, right? It's done while it's almost like you're typing that, like that data is collected anonymously and the algorithm is improved. And I would say that's like a version of what you would call AI or streaming data. I don't think we're there yet in lending. I know everyone loves using those terms in pitch decks and all those sort of things, but I don't think we're there yet, at least based on the experience.
So one last question, Rushi, for you. So what's the vision like? Say, let's say by 2028, 2030, what's the overall charter for Oaken? Where do you guys want to be?
Look, the simple singular goal is the volume of loans. We don't particularly care about the size. We care about the volume, because volume means everyone who probably needs one is getting one. It's very hard to say, man. We'll be doing so many thousand crores or whatever via these APIs, whatever. But what I would say, right? You'd want thousands of use cases, thousands of loans going out. Hopefully, the new use cases which have not been done in the past, and ideally, people would be creating the use cases now without our involvement. At least us enabling it, but without our physical involvement. Uh, and basically, what that means is, can we do a tech-enabled way where, like, say, you come up with a new use case, you can go publish it somewhere, and lenders can subscribe, and you can get going without having to talk to them. So we should be irrelevant other than creating the platform for the participants to engage with. Then like in the future, now, again, now you asked me about the dream, so I'm dreaming, but you'll like, can I create a bouquet of services? Let's say a new lender wants to come in, and they can literally checkbox the bouquet, whether it's from, say, a Frax, whether it's where you do white labeled versions of this. And it's not like we'll provide. Like, you get market participants to publish their products, and then they can pick from a menu of prices and options. Um, can I do the offer engine? Which account aggregator? Which BRE should I use?
Yeah.
Whose penny drop service should I use? Whose disbursal service should I use? Whose eNAT should I use? Whose e-sign service should I use? Can you have them all on a menu? And then we both know there are multiple players doing all of this,
Yeah.
right? And can you create a menu where someone can just select and the whole flow gets stitched together in one go? Now I'm dreaming, but maybe at some point in the future that will be, we can enable that. We don't want, as infra builders, you don't like, it's not that uh, you like if someone is able to stitch this together quickly and start lending, it benefits the infra anyway, right? Because then it focuses your goal. But I mean, the first step, right? The baby's got to crawl. We got to scale these first two reference implementations, and then all that hopefully should come in the future.
Great, Rushi. So I think we are about time. I think there are a lot of things that we can discuss more on Oaken, but we'll leave that for some other time. And it's been now for me also. It's been more than 6 years. I've been working in the working capital finance space. But every time I have a discussion with any of the industry expert, I really learn something new. And the same cases with you as well. Anytime I speak to you, I always learn something more about Oaken. So thanks a lot for sharing everything in such a
Man, you
detailed
and me both.
way.
Because as I talk to people and we figure out new things that need to be done, like, see, this is the first time in my life where like we don't have even like sometimes 70% of the answers, right? Like you just got to go figure them out as you go. But that is the nature of this beast.
Right, but there is so much to do. I think any kind of a fintech company you speak to, any lenders that you speak to, you actually see there is so much to do in the coming decade for the Indian ecosystem on the lending side. So great, Rishi. Thank you so much for giving your time. It was pleasure
No
having
worries,
you
man.
here and having this discussion. Thanks a lot.
Thanks for having me, man. See you.